The Money Man is here. Brien Krank from Krank Investment Advisors, your local Raymond James investment advising company here in town. And Brien is always good enough to stop by for a few minutes here at 7:35 on Thursday and give us our weekly look into the markets. Hi, Brien. How are you?
Good morning. I am fantastic. Boy, we got a market with a tailwind. I love that sort of thing.
Unbelievable. Unbelievable. We were 29,000 on the Dow at the high-ish, something like that. Go all the way down to under 19 at the low end, and you're thinking, okay, bounce up a little bit, the dead cat bounce of nothing else. Right. And there's been a bounce, and it keeps going back higher and higher and higher and higher. And my theory has been that we might have, a quick recovery in the market. The economy may not be the V-shape, but boy, the stock market sure looks like it wants to be a V-shaped recovery.
Oh, right. The stock market will make a liar out of most people, and everybody said we could not have a V-shaped market recovery, and that's exactly what's going on. And so I'll take it. I love it. Keep in mind, though, that the same stocks that brought us down aren't necessarily the same stocks bringing us back up. So there has been, changes underfoot, but the stock market is a great indicator of where we're headed economically, too. So those of you with a positive attitude, the stock market confirms that.
Yeah. So are we getting there because of fundamentals, Brien? Are we seeing good earnings reports? Are companies doing the right things? Are they earning this? Or is this just kind of exuberant? What did Alan Greenspan used to call it? Irrational exuberance? Is it just that people are excited and they're done being cooped up and they feel like the future is bright? So is this emotional or is this technical?
Well, it's both. There's always emotion in the stock market, and that's why you get some of these knee-jerk reactions. And so I think the sell-off originally, was very fear-based, but it was also a question of the unknown. Nobody knew how bad the economy would get or just how bad this shutdown would affect us or the virus or things of that nature. And then we all got our scratch pads out and started doing some math and really looking at things. And so when you say, are there earnings behind this? There actually are. So when I said not the same stocks that brought us down are bringing us back up, a lot of these, I'll call them COVID-19 plays like, DocuSign, a lot of the technology stocks that enable us to work from home or store things into cloud or work collaboratively from, various work environments, those stocks are having, great earnings and reporting, potential upside in the future. And so that's where a lot of the money is chasing. So yeah, there's real fundamentals there too. Plus we're recalculating the fact that things are not as bad as they told us they would be.
Okay, so is this the time to buy more or maybe take some profits now because we've had this nice little run up?
Oh, those are tough questions. I always can rely on you for something
well,
like
I'm
that.
sorry, because I'm wondering about these things now.
So,
this is where you make your money, Brien, right?
Yes,
Making these decisions.
And a little bit of both, actually. So we've been doing some profit taking. So a lot of those positions that we started putting on, say, in March and April, we've been actually selling. And those aren't necessarily conscious decisions just to take a profit. We're starting to see signs of distribution. And so, we've taken profits just this week in the last couple of days in some of those technology names and move that money to the sidelines. We are seeing a rotation out of some of those tech names that have come up so far, so fast, and they're moving back into some of the laggards right now. And that troubles me a little bit. So when you say, should we be putting more money to work? There is enough money on the sidelines right now that we don't need to see a rotation out of one thing into the other to make this work. Money could just be coming in. So that's a negative, but there are so many other positives going on too. So I could make a case for either one of those. And that's why I say I'd rather be invested right now, but being very, very cautious.
Are there particular sectors? You talked about DocuSign, and that's changed how we sign documents, hasn't it? You don't have to print things out, sign them, fax them back, scan them in or whatever. What kind of sectors out there do you like where you think that there's still some opportunity? Because the big boys have already made their buys, right? They get in way earlier than we do. They make their decisions right away. So they've been buying the right things probably for a while. But is there still some upside with some sectors out there that you think maybe hasn't been taken advantage of quite yet?
Yeah, so when I talk about distribution, that's what I'm doing. I'm watching the footprints of those big institutional buyers and sellers to see, and they are exiting a lot of those big names. I mean, if you look at this week, you've seen the Dow, skyrocketing higher. The Dow Jones Industrial Average has actually been a laggard since this whole thing took off again. The NASDAQ has been the laggard for the last week and a half now. And so you're seeing those NASDAQ names, those technology names, that's where the big guys are exiting right now. You know, you just look at Facebook or Google or some of those that are struggling to get any higher from here. And so those are the things that I'm saying, okay, I'm either going to take my profits or I'm going to watch them very carefully. So if we say, well, where is that stuff going? It's going into energy and other things like that.
What about Elon Musk now and this space launch and all this kind of thing going on now, and Trump and his Space Force? Is there some way to make money in this industry? Because it seems like it could be hot.
Well, I think there really could be. So, you know, you look at SpaceX in general, and that's not necessarily something we can invest in, but people want to invest in Musk. And so they say, how can Tesla stock do so well? And that really is an investment in Musk. And so that's the obvious choice if you want to follow what he's doing. But think about NASA and think about when we were ramped up for, you know, moon launches or things like that. There's all these spin-off categories.
Like Tang?
Exactly. Tang, new metals that are being developed, fuels, things of that nature. So, yeah, I think there's going to be a lot of suppliers to that industry that we can participate in.
What about, Brien, I mean, when you talk about healthcare and mostly pharmaceuticals and big pharma, and they're talking about bringing manufacturing back from China, and where do you see that future? I mean, right now I would imagine it's probably hit and miss.
Well, right now it is hit and miss because we don't really know what the future looks like, and those jobs are still in China. Are they going to come back to the U.S. or are they going to be, you know, outsourced to other countries with cheaper labor? But then again, think about all those spinoffs. You've got the real estate just to house all those operations, so that could be a big plus. But then again, suppliers to all of those, the labor to all of those. So yeah, I think as some of those things come back, particularly in pharmaceuticals, which really are some good-paying jobs if they're back here in the U.S., that could be a boon for our economy, and again, give us some places to invest.
There was a note I just saw a minute ago from Fox Business that first quarter GDP fell 5%, a 4.8% drop was expected. I just don't think that the market's going to really care about any of these. We already know it's going to be bad, right? So if this was a GDP drop of 10% or something, then it might spook people. But if you miss by a little bit, or there are more unemployment claims than maybe what we initially thought, just doesn't seem like it's going to be real punitive in this market environment.
Oh, I would agree. I think all of the economic numbers are things that we can sort of look at. Let's watch them, but it's hard to take them real seriously because even the reporting is very flawed right now. We just got the latest unemployment report right before I walked in the door here, and it was still over 2 million claims for the week. So that's a negative. We'd like to get under that, but the continuing unemployment, so those people who continue to draw on that, that actually went down more than we expected. And so that's probably a sign of people going back to work and things of that nature, but another positive that we can hang our hat on.
The president is taking aim at social media, Twitter and Facebook, and saying that we need to get more involved in monitoring what's happening there. Does that hurt some of the prospects for these stocks in the long term?
Well, let's watch and see. It's long overdue. So we've heard lots of voices crying out for regulation there. Even Mark Zuckerberg is saying, please, government, help me. And so, yeah, there's room for somebody to get involved and put some rules in place and things like that, because it really is the wild, wild west if you go on Twitter, right? So let's try to, I'm not a big fan of regulation, but just to put some fair ground rules in place might be good. Keep in mind, though, all of those social media platforms don't make their money necessarily by what's posted. It's through advertising and things of that nature. So I think in spite of any changes that come that way, they can still monetize that.
Okay. Good stuff, Brien. If people want to find out more about you and how you might be able to help them, how do they find out more?
Just come downtown, Fargo, talk to the team, or give us a call. We're at 235-0119.
He is Brien Krank, the money man. Collins and Krank, Raymond James here on the Need to Know Morning Show. 7:44. Be back with a look at traffic, weather, and sports right after this.